Welcome to our podcast series, Talking with Traders, hosted by expert trader Garth McKenzie in London, from where he's interviewing various guests on the topic of trading.
Welcome back to Talking with Traders. This is the 5th season of the podcast to take us up to the end of 2022. Thanks to all our loyal listeners for returning, and welcome to all our new listeners. As before, IG Markets have come on board as sponsors of this podcast. We're truly grateful to have such an award-winning CFD provider as sponsor alongside us. In this season, I'll welcome back some guests from the previous seasons of the podcast to get their updated market views, and we'll also be bringing in some new guests to the microphone too. As always, the aim with these podcasts is to give you the opportunity to listen to differing market views and to assist you with your own trading and investing education. So with that in mind, let's get straight into another episode of Talking with Traders. Welcome back to another episode of Talking with Traders, and this is in fact the last episode in season 5 of Talking with Traders. We will take a little hiatus now until the end of 2022, and then starting again in January 2023, we will begin with season 6 of Talking with Traders. For this episode, I'm delighted to welcome a new guest to the podcast. His name is Ross Larter. He is the author of a book called How to Make Money in the Stock Exchange. And I'm really looking forward to chatting to you about your career in the market, Ross, and about your views and how you guide traders, the mentoring service that you run. Sure Trading is the mentoring service that you run for clients. Welcome. Good to chat to you.
Thank you. Thank you very much, Garth, for inviting me. I really appreciate that.
Super. Yeah, I'm looking forward to the next 40 or 45 minutes of chatting to you, Ross. As I do with every new guest when we get a new guest onto the podcast series, if you could, in just 2 minutes, give us a little bit of a background to yourself and how you got involved in the markets and the sort of the path that your career has followed to this point. Because I know it's not such a conventional route that you've taken to get to the point where you are now.
Yes, I think it is a quite different to a lot of people that are in this environment that I've found myself in. Originate in the Eastern Cape, farming family in Maltino in the Eastern Cape, where they still make Omar rusks.
Okay, right.
And went to boarding school in Queenstown. But my career working, I started off in the human resources department of a goldfields mine.
Okay.
Well, that's where I want to start the story. You know, I was in the bank as well for a little while, just after my military training and so on. But I worked for Goldfields, and at the age of 26, I was doing very well there. I was human resources manager of one of their mines. Now, I've always wanted to be, I had always wanted to be in a business of my own. And I left the mines, bought an existing business together with a business partner, but it really didn't turn out well. And so we moved back to the Eastern Cape, where my wife and I ran a small business.
Okay.
And then I studied to go into the full-time ministry, actually. And when I was ready, we moved to Berkeley East, where I was the pastor of a church for just a little over 11 years. Now, it was during that time, in 1994, when things were changing in the country and so on, we decided to start a private school. And we used a curriculum called Accelerated Christian Education, which is basically based on the Montessori system, where each child learns at their own pace. And this, of course, helped those who were on track education-wise, helped the ones who are not on track education-wise to not cause the, not be retarded in their progress,
right,
with the children who were not on track. So we started the school. The local Model C school was dragging their heels at that time. And so we started the school with 7 children, my 2 children being 7 of the 2 of the 7 children. And it was actually quite interesting. The word got around that we were offering boarding school facilities. And that caused the school to mushroom from 7 children to 140 in 1.5 years.
Wow.
In the small little community, Berkeley East. Now, Berkeley East is on the southern tip of the Drakensberg, just on the east, in the Eastern Cape, just below the Lesotho Mountains.
Right.
And so now what happened was we got so busy with that, we had to establish boarding school facilities and everything. And eventually, as I said, 140 children. So we were employing 44 people, including teachers and hostel staff and everything like that. So it became something I was very passionate about and got very busy with that I handed over the pastoring side over to somebody else and went full-time into the school. But what happened was when my children reached senior school level, there was a bit of a dilemma in that our school had not fully developed into a senior school. So I had the choice of either sending my children to boarding school so that they could finish their senior schooling. My parents, being farming parents, had no choice. They had to send us to boarding school.
Right.
But I felt I had a choice. And so we decided to rather move to East London, which for us was the big city.
Right.
We moved to East London and so that my children could do their senior schooling there. And when I arrived in East London, I was approached to start another school because it was a very successful school. I'd hand it over to somebody who was very competent in running it and so on. But we decided against another project like that. So I was basically in East London looking for business opportunities. I did get involved in business opportunities, including network marketing and so on, but never really found anything that I felt I could be passionate about.
Okay.
And so it was during the early years in East London that a business acquaintance contacted me, and he said to me, Ross, you've always taught people different things. Why don't you teach them how to trade on the stock exchange? And he was marketing a software package that provided end-of-day data on all companies on the local JSE. And I said to him, I don't know anything about the stock exchange, but you know what? I needed an income. And so I decided to take up the challenge of learning the process. I knew nothing about the stock market apart from what I'd heard on the news. But I needed an income. Took up the challenge, learning how it works. I had the people that had introduced the idea to me as mentors, showing me how the whole setup works. But my focus was not for me to make money out of the stock exchange per se right at the beginning. My focus was to learn how the whole process works so that I could be in a position to teach others how to do it. Now, it wasn't long before I started trading myself, but initially it was the teaching and the mentoring and obviously earning an income through that became teaching and mentoring is a passion of mine. And I just found it very gratifying.
Yeah.
So I started our company in 2002.
Okay.
Which is now 20 years ago, in February 2002, in East London. And what I learned very early in my journey as an educator of people wanting to learn how to trade is that trading can be quite a lonely journey.
Sure.
I've always been strong on community, and I try to make the students feel that they are part of a wider community, a wider trading community. Where they can bounce ideas off each other and so on. And so when I started out, we didn't have trading platforms and all that, internet and computers and personal computers had just
2002, that was when I started, and there wasn't really online trading. It was very much in its early infancy at that stage, if you were very advanced.
Yes. And so you had to phone the broker to execute your trades for you. And we were dealing with end of day software.
Right.
And so we didn't have, a live charting or anything like that at the time. Yeah, so I was introduced to derivative trading, that's CFDs and so on,
Yes.
in 2006 by an ex-policeman.
Okay.
But, yeah, this ex-policeman, it was a very interesting story. He was in the dog unit in Durban, him and his wife, both dog handlers. And one dog had been killed in a skirmish, and she said, I can't handle this type of pressure, and she left the police, and he actually followed suit, and he left them, and he'd heard about CFDs, and he put 10,000 Rand into his CFD account, and within 18 months he had turned that 10,000 Rand into 1 million.
Crikey, that's a lot of gearing and a lot of things going right.
Absolutely. And it was at a time when the markets were just literally such strong bull markets before the 2008 crash, and this impressed me greatly. But I'm always very, very quick to say, Garth, that don't let that create unrealistic expectations in you.
Yes.
Because, this is what happened to me. But I personally haven't turned 10,000 into 1 million in 18 months.
No.
I don't know many people who have.
Yeah.
Well, I do know of some, but not many at all. And but he introduced me also to online trading, and so he sort of mentored me with regard to the derivatives trading.
Okay.
I moved to Cape Town in 2008, mostly for family reasons. We have 2 children, and daughter was studying here in Cape Town. My son was in Pretoria. And so it was just my wife and I in East London. And so we just decided, my business is the type that can be operated from anywhere.
Yes.
So we moved down to Cape Town. So we've been here for about 14 years. And when arriving in Cape Town, we continued to meet with our local clients on a weekly basis, at first hiring premises around the city. And then I was soon invited, to meet and hold training sessions with in our brokers' offices. And so that's basically how we sort of started the business and went about the business.
Okay. All right.
In 2016, I was approached by Penguin Books, and I was asked by them if I would consider writing a book that would help the ordinary South African benefit from the stock exchange. Now, the book, as you mentioned earlier, How to Make Money on the Stock Exchange, it was launched in February 2017. It was actually quite interesting because we used to meet a couple of our trading clients, but there was another guy who met with me, who I mention a lot in the book, met with us on a Tuesday morning. He used to trade the Aussie with us. And he taught me a strategy which I share in the book. And I showed him this email from Penguin. I said, I've never written a book before. And he said, but you have to. You just have to. And so anyway, I took up the challenge, and it's just been a wonderful journey since then, I must say. But what happened was it was launched in February, and this is when things changed for us, in that I was working with local people in our local community. I had the odd client from outside of Cape Town, and of course I had a number of clients in East London from our days there.
Yeah.
But I was working mostly in the local community. But all of a sudden, when people were reading my book and then contacting me, that was when we actually went completely online. So my whole business now is online, because our training and our mentoring, we don't go to a physical office anymore, or physical meetings anymore. Obviously, I try and meet with my clients as often as I can, but certainly the training is done all online.
Yeah. Okay. Very interesting. So, I mean, you and I are similar in certain respects, in that you run I suppose, let's call it an advisory / mentoring / guidance service to your clients, people who DIY traders, I presume mostly DIY traders, who are trying to navigate their own way through the markets. You do it with Sure Trading, and I do it with my traderscorner.co.za brand. But a couple of questions which I'd like to put to you, and we can perhaps compare notes on this. You obviously get new clients that come to you looking for mentorship, looking for guidance. They're presumably doing that because they don't have much experience in the market, or they're lacking in the sufficient experience. But do you believe that anyone can become a trader and become a successful trader? Or do you think that some people are just not cut out for it? I mean, you mentioned CFD trading, and if you look at all of the CFD brokers internationally now, they, by law, they have to actually disclose the percentage of clients that are winning and losing. And it's skewed towards the losses. I mean, currently IG markets, I think they're sitting at an average of about 77% of their clients lose money trading CFDs. And if you go to any other CFD provider, you will find that the number is the same. I mean, for my experience, it generally averages between 70 and 80% all, over time of people who trade leveraged products will lose money, which means that there's a very small percentage who are even managing to keep their head above water, never mind actually make a success of it. Just because 80% are losing doesn't mean that the other 20% are all flying and driving Ferraris. Most definitely not the case at all. So, to get back to the question in your mind, do you think anyone can do this? Or are there certain people that are just cut out better for it? And I mean, do you sometimes look at a person who arrives there and sort of comes in the door, or the virtual door, I guess, as it is in an online world now, and say, this person's just got no chance? What are your thoughts on that?
I believe that, well, first of all, trading is not for everyone.
Yeah.
That is upfront, and those stats that you've given are possibly even conservative. They're conservative in that. I think the percentage is probably about 90%, Garth. And the reason for that, I believe, is that people come into this environment with stars in their eyes. They have this idea, and this is because it's heavily promoted on the internet, where people are saying, just follow me and you're going to become wealthy overnight, and this is sad, especially in view of the fact that so many of our people have never really been exposed to the stock market. Now, all of a sudden, they are exposed to the stock market, but you get people that are giving them unrealistic expectations. So even, it was actually quite interesting, because my book I wrote in what turned out to be the single most difficult trading year that I had, 2016. And so it was difficult trading. I was also writing the book and so on and so forth. And so I tended to home in on the losses. And I got to a stage where I thought, I'm hoping I'm not putting these people off, buy my book and they get put off trading for the rest of their lives, sort of thing. But actually, it turned out to be exactly the opposite, because all of a sudden they were being exposed to the risks, and that it's not complicated, but it's not as easy as they initially thought. But even so, even being told that in my book, people still have unrealistic expectations, and I think it's the unrealistic expectations that causes that statistic to be true. Is that even, and also they say that there's a risk involved. I know there's a risk involved, but they haven't embraced the risk to the extent where their money management is right.
Yeah.
There are exceptions, obviously, but for most people, it's not about in education. It's not about intellectual ability as much as it is about temperament.
Yeah.
I believe that anyone can become a successful trader if there is a desire, but it has to come with the perseverance and the discipline required. Those have to be present, and they don't come at the beginning. They come as time goes on. So I try not to prejudge, but there are people that I think, I don't know whether you will be able to trade. But I can't stop them. And the reason is because they're going to go to somebody else. Yeah. And so I'd rather me sort of coach them and just tell them the pitfalls and so on before they start putting their hard-earned money in, I had a person phoning me one day, and he said, do you think it's realistic if I ask my aunt if I can borrow 5,000 Rand from her, and that I will pay her back at the end of the month after having made a profit of 5,000. And I said, absolutely no, And I had
Yeah.
somebody else who said, I've just had a knee operation and I'm going to be incapacitated, not be able to go to work for the next 3 weeks. Do you know anything about crypto? Because I want to make money out of crypto. That type of thing. These are totally unrealistic expectations that are created by people who are just trying to sell them a program and so on.
Yeah.
So, yeah, it's as one progresses, one finds out that it's not so much about knowing the technical side of getting into and out of trades at the right place, but it's about being able to handle the fear and the greed. And one of my most successful trading clients has only got a grade 10, sorry, a standard 8.
Right.
Yeah, I mean, but he's dealt with the fear and the greed, and he's strict about his trading and his money management rules. He's extremely disciplined.
Yeah.
But it's taken 3 blown accounts, but he's been trading for 15 years. So this all happened in the first 3 years. But yeah, I do believe that most people have the ability to be able to learn how to trade, but it's, as I said, the temperament.
Yeah, it's not as easy as they make it out to be.
Yeah.
And as you say, the marketing is misleading, which is unfortunately what creates these unrealistic expectations. I sometimes almost feel like there should be rules or regulations around the marketing of these products, much like there's the regulations around marketing cigarettes. You think back in the olden days, the way they marketed cigarettes, it was very similar. You'd see people on the beach with a yacht and a pretty girl, and this was the life of smoking cigarettes. Well, now you've got the guy with the yacht and the helicopter and the Ferrari and the pretty girl, and he's a crypto trader these days. And it's kind of like these things should come with a serious health warning. But they don't, because the rules don't, the rules of advertising don't stretch that far. Maybe it'll come in future.
And they've got this picture of you sitting on the beach with a laptop.
Yeah.
Meanwhile, you can't even see the screen on a laptop.
Absolutely. You can't, because of the reflection. And well, I've never even tried, and I've never seen, I don't know anyone, and I know a lot of traders. I don't know any of them that trade at the beach.
Yeah.
I think this is one of those nonsense things that you see on the advertising.
Absolutely.
But fair enough. So you think most people they have the ability to learn, but let's talk about the successful ones. I mean, what do the successful traders do differently that sets them apart? And we know that they're a very small minority. Very, very small minority who are the really successful ones that can actually do this and consistently generate profits and make a living out of trading. What do they do differently that sets them apart from the rest?
I believe that successful traders think differently from the people who are unsuccessful. And I've learned, they've learned not only to accept the risk involved, but to actually fully embrace the risk. And they also take the responsibility. What I find with most traders, even if they're not even novice traders, is that if they get out of a trade at a loss or whatever it is, it's always the market's fault. It's always the internet wasn't right today, and what are the markets doing today? I mean, goodness me, there must be. I think the broker has got something up their sleeve that I just got out of this trade, and they don't understand the different, the bid and the ask, and all of the different price and how it works and everything like that. And I believe that a successful trader fully embraces the risk, and they take full responsibility. In other words, they never blame the market. They never blame, because the market is just giving you information. The only thing that makes you biased for or against that information is if it's going against your trade or your own
belief system.
Absolutely. And so, and I believe that they also have learned to enter each trade with a totally carefree state of mind. In other words, there's no more emotion when losing a trade than there is when they are winning a trade. Or winning trade. Now, that's easier said than done, because most of us, so in other words, every trade becomes part of a process. It's not an event in itself. It becomes part of a process. So actually, I don't know whether it's a sort of correct way of looking at it, but if you want to be a very successful trader, trading has to get to the place where it's numbingly boring.
Yes, yeah.
Boring, sorry, numbingly boring, because if there's no emotion, because that's the biggest thing. Just one of our traders, he's my oldest trader. He's well into his 80s, and he started with me when he was in his 70s. But we were chatting the other night in one of our meetings, and he kept on. He's always asking, "When do you think the turnaround is going to come? When do you think the turnaround is going to come?" And what happened was his trade was going against him, and he was wondering when the turnaround was going to come, and then eventually he just had to get out because the turnaround didn't come in time. And it was only when he was out of the trade that he saw that his mind had been blinded to all the factors or all the signs that the trade was going against him. But he only saw that when he didn't have any money on the table to lose or gain.
Yeah.
And so this is what people who are successful traders have managed to do, is to deal with the fear. And the way to deal with the fear is actually to deal with the greed first.
Yeah.
Because we always want to eke we all know that we need to cut our losses short and run with our profits. But you know that every single person that I know, myself included when I began, is I cut my gains short and I ran with my losses.
Yeah.
And I sat there white-knuckled waiting for the market, hoping that it's going to turn back in my favor. I think you've probably also made those mistakes.
Absolutely. I've made all the mistakes many times. Yeah. I was a slow learner. I still learn. None of us are ever masters at this. I think that's the other thing. We are constantly learning.
Absolutely. Yeah.
Yeah.
No.
That you mentioned there just reminds me of a podcast I did with Dr. David Paul in the first season of this podcast. So that was like 2 years ago now. But it was that whole thing of, running your winners and cutting your losers. And we know, as you say, you're supposed to cut your losers quickly, and let your winners run. And when I asked him if there was a holy grail in trading, his answer to that, which is kind of revolves around this, is he said that the difference between a winning trader and a losing trader is this. He said that a losing trader, when he's in a winning trade, he quickly becomes a pessimist. In other words, he gets fearful that profit is going to disappear, so he snatches at the profit. When the trade starts to go against him, he suddenly becomes an optimist and expects that it's going to turn around, it'll be okay in the end, and he continues to ride it. That's the losing trader. The winning trader, on the other hand, when he's in a losing trade, he quickly becomes a pessimist and cuts the trade in fear that it's going to get worse.
That is so true.
And when he's in a winning trade, he becomes an optimist and adds to the winner. And that is one answer in this podcast series, which I've interviewed many people now, but that stood out to me as such a clear distinction between what winners and losers do differently.
No, absolutely.
Now, tell us a little bit about your own trading. Do you have a playbook that dictates what a trade needs to look like, what criteria need to be in place for you to enter a trade? Do you have a specific routine each day in terms of how you scan the market and looking for opportunities? Give us a little bit of insight into the way you trade. And I presume this is also then what you try and teach to your clients as well.
Yes, no, I'll happily do that. The answer is yes to all of those things. I do have we try to be as structured as possible, because there's one thing that I've learned over the years, and which I teach my people, is that you have to have trading rules. You're entering in an environment where there are not many rules in terms of, it's like when you open a bank account and you do transactions on the internet. I mean, you can pay anybody whatever you want and draw money out and things like that. The only time they don't listen to you is if you've got no money in your account.
Yes.
And, and now the trading environment, nobody's going to stop you. As long as you've got money in your account, nobody's going to stop you from putting in a trade or taking off a trade and everything like that. So we're entering, which is very different to normal. You go into a normal job and there are rules and so on, and there are rules in life like traffic laws and things like that. In the trading environment, you have to know a certain amount, obviously, but and there's certain fundamental rules. But to stop you from doing something, there are no rules. So you can put on a trade, you can take off a trade, you can do anything you want to. And this is what gets so many people, because of the fact that they're moving into this environment where there's nobody looking over their head to see whether they're doing it right or anything like that. And so they really mess up in the beginning. And that's why we've been so strict all the years with money management and not taking trades that are too big for your account size, and just to keep to a certain percentage. So we have strategies. I share strategies in my book, and my second book, which is coming out next year, is also share some other strategies that I've learned. But mostly, we stick to just a few strategies. I know that there are people out there that every week you get an email from them and they've got this new strategy and this and that. And that to me is very confusing. And so let me give you my personal routine on a daily basis.
Yeah, please do.
What I do is I do three types of trading. I do intraday. And then I do end of day, which is basically swing trading or position trading. And then I have a long-term investment account. All of them are in the same trading account. This is apart from my retirement annuity and those type of things. But, so on a daily basis, I have a strategy where I trade the top 40, the Aussie, on a 5-minute chart. I share a strategy that I use in my book, in my first book, and but I've tweaked it in the second book. But now I don't trade that every day. And the reason for that is if you're trading a 5-minute chart, you have to be there. You can hardly even go to the toilet.
Yes.
And so for people who are working, this is just a no-no. As far as I'm concerned. But so if I've got an appointment, the market really starts moving at 9 o'clock, around about 9 o'clock. So anywhere between 9 and 11, if I've got an appointment, I don't trade that trade at all. But I keep a watch on the US indexes, the Nasdaq, the US 30 or the Dow Jones and the S&P 500. I keep a watch on those and I trade them on an hour chart. So there I only need to make a decision once an hour. So at 5:02 of every hour, I then see, okay, do I have to do anything? Do I have to set, adjust my stop loss or whatever it is? And so that one doesn't take all my time. So I can do other things in between. So I do that, and then I also do what we call, what I call end of day trading, which is where I do equity CFDs, on the local top 40. So basically, what I do is part of what we offer our folk is on a daily basis. In the evening, I go through the top 40 companies. And I alert our clients as to possible trading opportunities that I'm seeing with the strategy that I share with my clients. I see this happening, and they can then decide whether they feel they want to put a trade in. And we keep a record of those too, So I don't necessarily go into every single one of them, because often there are just simply too many opportunities. So that is the end of day trading, where I do that. So the decisions there are made outside of our South African working hours. And then, of course, the hour strategy, you can trade well into the evening, because these markets are open 23 out of 24 hours.
Yeah.
And then I've got my long-term investment portfolio, which basically doesn't take all that much time,
It's passive.
Yeah. So that's my routine. So I've got 5-minute trading if I choose to do so, if I've got no mentoring meetings and so on in the morning. And then I've got the hour strategy, which doesn't take all that long to set up and everything like that. And I only check it once an hour.
Yeah.
And the other one is end of day. Yeah.
Can you tell us just a little more about it? I mean, obviously people should buy your book if they really want to get the greater insight. But I mean, that hourly strategy, I guess, interests me. I do something similar on the S&P 500, and I seldom actually drop down below an hourly chart for the type of trading that I do. I don't follow the very short-term stuff like the 5-minute charts that you refer to. But
Yes.
give us an idea. US 30 or Dow Jones Industrial Index, 1 hour chart. What kind of criteria would you look at to initiate, for example, a long trade or a short trade? I mean, do you look at chart patterns? Are you watching moving averages? What are the kind of rules, as it were?
Very interesting question, Garth. And I share all of these strategies in my second book, so you're just going to have to get my second book.
Well, we'll talk about your second book at the end of the podcast. I'd like to get it. Yeah.
Now, just in my first book, I teach on an end of day strategy and also the 5-minute one.
Okay.
But it was actually after I had written the book that I was introduced to a gentleman who I talk a lot about in the book, who introduced me to a strategy which we call the fractal strategy.
Okay.
And he is the one that only has a standard 8.
Okay.
But I tell you what, a prolific trader. He's got 2 children that are full-time traders.
Wow.
So they are in a position to be watching the charts all the time, and he goes about his business. But and so basically it's a very, very simple strategy. We don't use moving averages. We don't use we use just the stochastic in a certain way, and then we use the fractal, which is a high point or a low point with 2 candles lower than it on, if you look at your hand, fractal is the one at the top and 2 candles going up and 2 candles going up on each side. So and so it's a breakout strategy on the fractal. And then we also use support and resistance lines, as well as we take the doji candle very seriously, because that talks about market indecision,
Yes. Yeah. For listeners that don't know what a doji is, it's a Japanese word. It kind of means equal, I presume. And it's where your opening and closing price for that time frame is the same.
Yeah, the bulls and bears have had an equal fight, so nobody came out of that. So
exactly, and as you said, it indicates indecision, and it often happens at a turning point.
Yeah, so these are the criteria that we use to get in and out of trades. Now you can apply that. The interesting thing is that you can apply that to a 5-minute strategy. You can apply that to a 1-hour strategy, a 30-minute strategy, a day strategy. You can even apply it to the weekly charts. It's a very, very simple strategy, and your charts are clean.
Yes.
Not looking like a spider web with so many indicators.
Yes.
I've come across people, and I went through a time like that too, where I just over-analyzed and consequently never got into a trade. And I realized that all your strategy does is give you an edge over the market, and it gives you the probability that one thing is going to happen over another. And just getting back to what successful traders do, that is not done by unsuccessful traders, is successful traders don't have an expectation of the market. They will give the market or take from the market what the market is offering them at a time.
Yes.
And they don't have an expectation, because it's when you create an expectation that something's going to happen over another, and then the opposite happens, you take strain and then all of those other emotional factors.
Definitely.
but yeah, so this is a strategy that we use just a handful of indicators, and you can apply it to indexes. You can apply it to even ETFs, that are not geared. So you can apply it to Forex, you can apply it to commodities, anything.
Yeah, anything that moves and has a bit of liquidity behind it.
Yes, it definitely has to have liquidity.
I liked what you said about keeping it simple. I mean, I firmly believe that as well. I mean, my own charts are pretty clean. I use candlestick charts. I do put some moving averages on. I use trend lines and one or two momentum indicators like a stochastic or a relative strength index. But like you say, don't overcomplicate it. My charting platform that I use here has got a drop-down list of indicators, which I've never counted it, but I think there's over 100 indicators on there. Half of them, I don't even know what they do, and I don't care. I just want to keep it simple. And because I think what a lot of people make the mistake is they think more analysis is going to make them better traders because they think they're going to get more information by doing more analysis. And that's not the case. If you want to become a better trader, become a better you, right?
Yes.
Understand yourself. To that point, risk is obviously huge in this business, and managing risk and managing money, like you mentioned earlier. What is the risk number that you'd look at on a trade? And I'm talking now your let's say your 5-minute or your hourly chart strategy. So we're talking intraday trading here. We're not talking about long-term investments. That's a different kettle of fish altogether.
Yes, sure.
What do you allow yourself to lose on an individual trade?
3% of my capital.
Okay, interesting.
Not 3% of my exposure or 3% of my capital. And that's what I won't allow myself to. So my position size, I put the stop loss at my stop loss order to stop me from losing too much money at a certain level, and then I work out the number of contracts I can, because my risk, after all, is the difference between my entry price and my stop loss price.
Yes.
So I say 3%, which basically you can go into 33 losing trades. And you still haven't lost all of your money. Yeah,
and it's be hard to get 33 wrong in a row. Even if you tried, you'd probably get some right by accident. But that's interesting. So you've gone 3%, and now that's higher than what a lot of people would advocate. I mean, I think the generally accepted rule is 2%. And I know in the courses that I teach, I always say 2%. But what I've found over the years is, as I've become older and maybe less testicular fortitude, to be polite, the numbers become smaller. And I suppose that's also as responsibilities have grown and risk appetite is less, etc. But it's gone from 2% to 1.5% to 1%, more or less. Nowadays it's about 1% per trade. So 3% is quite high, knowing that there are times where the market dishes you clusters of winners and clusters of losers.
Yes.
So if you're risking 3% on an individual trade, and you have a nasty cluster, so you get 8 wrong in a row, and it can happen, that's minus 24%. That's a big drawdown.
Yeah.
Do you sort of if that sort of thing starts to happen, do you step back? Do you stop? Do you reduce the risk?
I think one reduces the risk, funnily enough, as your account gets bigger. Because you can, it's the same amount of money, but it's less of the capital that you have in your account.
Yes.
I've always used 3%, and I think as I've got older, and I am a couple of years older than you, I still feel that 3% is okay, because of the fact that if your risk to reward is 1:2, then you have to have I know that, or you can go through 10, 15 trades that are losing trades all in a row. And if you're losing 3% of your capital on each one, it can be very, very scary. But I feel that if you persevere and you just stick to your strategy, in other words, you follow you don't follow the money, because if you run after the money is always going to run faster than you.
Yeah.
But if you follow the process, in other words, if your every trade is carefully planned and it goes exactly according to your rules, because most traders will tell me they've lost money. If they're honest with themselves, they've lost money because they did something wrong. They didn't follow their rules.
Yeah.
And so I think possibly it is a little bit ambitious to the wrong side of the spectrum, 3%.
Yeah.
But I've always kept to 3%.
Okay.
What I do is, we have a spreadsheet that I send out to my clients on a daily basis with the trades that I have seen falling in line with our trading strategies.
Yeah.
And so we keep a very strict record of that. And now, while I'm always aware that not everybody can trade every single one of them because there are too many opportunities sometimes, but if you had traded every single one of them, according to the money management and stuck to your rules, and also stuck to managing the trade while you're in the trade, every evening go into it, because I also notify them of move your stop loss to such and such a place because of whatever reason. And if you keep to those and you just go according to the process and not according to your need to make money, 3% should be reasonably safe. The other thing is, when you come to equity CFDs, there is the pricing is slightly different to just the spread, as with the international indices and so on. But there's a minimum of 50 Rand or 100 Rand per trade. Now, a lot of people start with very small accounts, and that's always a little bit of a problem. And so if they are trading with 20,000 Rand in their account or 10,000 Rand in their account, and they want to get into trades with equity CFDs, the share price has to go in their favor by even sometimes 2 or 3% before they even register profit because of the smallness of their so if they are trading equity CFDs, I sort of encourage them to have their account slightly bigger.
Yeah, same. I mean, I've always said to people, I think the number's 100,000 Rand, quite honestly. You could do it with less, but really and truly, like you say, if you want to overcome those transaction costs and be able to move the needle, you need to actually be properly capitalized. And it's like any business, if you can't go into business undercapitalized, you'll fail. And it's the same in trading. You can't be undercapitalized in this business.
Absolutely. Yeah.
Ross, I've had this question directed me many times, so I'm going to direct it to you. If you are so confident in your own ability to trade, and you trade for yourself, you did trade your own capital, why bother with all these other things like running a mentor service and writing books and having relationships with brokers and doing seminars and whatnot? Why not just trade? Why not just keep it simple? Worry about your own trading, and why are you involved in all these other things?
Okay, Garth, yes, I've been asked that question plenty of times as well. And I mean, even if I haven't been asked, I know that it's in their mind, but I've been asked enough times to know that it is a normal question. Why do you do what you do? Why aren't you driving a Lamborghini and living in a Paris if you are so good at trading? Now, I am personally in a position where I could trade for a living, but I actually have chosen not to. Why? The reason is because I really love what I'm doing. I really love mentoring people. I love getting people involved. I do so many times feel almost guilty about getting them involved. I mean, they're the ones who come to me to get involved, but I sort of feel guilty because I know that they're going to go through pain and that they're going to. But you see, the thing is, there are people that are going to be hugely successful, and so they ask me the question, why are you doing it? Well, I'm passionate about teaching people. Isn't it very similar to asking a doctor why he wants to, who's quite capable of opening his own practice, Why does he want to lecture university students that are full of rubbish anyway? Sometimes,
Yeah.
I've chosen to. I could trade for a living, but I actually enjoy what I'm doing. But there are people in my group who are retired, for instance. They trade a lot. There are some people that are in business that trade very, very actively. I feel that you can trade not for a living.
Yeah.
And you can trade on the side. And it's even better if you don't need that income to, So I don't discourage people from trading full time, but it's not a get rich quick thing.
No.
And I've seen so many people that trade full time that are now not trading full time anymore. Why? Because it's very stressful at times.
It's consuming.
And it's consuming. But trading, a lot of people, just because you don't have to have products to sell, you don't have to have customers to look after, you don't have to have premises,
no staff,
no staff, and so on and so forth. And they think, my goodness, this is fantastic. And it is, but it absolutely is probably the single most challenging thing you can embark on.
Yeah.
And I say it's like embarking on a new career. If you think about a doctor, how long did they take putting out money and, sorry, I just need to, sorry.
Sure. Cool. Go.
A lot of people think that, trading is easy and so on, but I say it's like embarking on a new career. If you think about a doctor, an accountant, an engineer, how long does it take them to get to a place where they're stopping putting out money, where they've got years of discipline and paying out and blood, sweat, and tears before they get to a place where they can say, okay, now I know enough to make money out of what I've learned.
Yeah.
Whereas in this environment, a lot of people think that all they have to do is learn how to click a couple of buttons on a computer, and that they're going to be able to make money out of it. And it's just not the same. It's like a doctor. You would think a person is mad if they say, I want to be a doctor. I think I'll just watch a couple of YouTube video clips on how to do a heart operation, and then I'm going to be a doctor. Now, there are people that do that, but they eventually get caught. And you would think they are mad, but people come into this environment thinking that it's a way to get rich without effort.
Yeah.
And while it's not physical effort, it is a lot of effort in terms
a lot of
discipline and things like that.
Yeah.
So even if I, obviously I will eventually retire. My son works in the business with me, and he'll probably take over. But I'll keep on keeping on because I love what I do.
Yeah. Okay. Well, it sounds like we share the same thoughts on that, because it's exactly the same for me. I mean, I also could trade for a living, but I enjoy interacting with clients. I enjoy preparing analysis, looking at strategies, and just sharing what I've learned. I think there's something enjoyable about that, being able to actually pass your knowledge on to other people and assist others with their own journey. And there's also, I mean, trading can be lonely. So if it's all you do, staring into a computer screen all day, it kind of gets a bit boring and lonely.
Absolutely.
So having other things on the side help. In addition, something you didn't mention, but I think for the listeners that are perhaps have wondered about this question as well, another reason why I don't just trade for a living is, and I suspect it's possibly the same for you, is that if you're just trading to make a living, to know that your ability to put food on the table at the end of the month and pay the bills is entirely down to whether you're going to be profitable or not as a trader, that's a lot of pressure to put on yourself. And when you have that kind of pressure, you're going to start making bad decisions, which is going to then have a negative outcome for you. So, the way I view it is I trade to try and grow my capital, not to live off the money. I do other things to live off the money, like this podcast, like my mentoring business, the Traders Corner business, etc. Much like what you've got.
Yeah.
And that's all risk-free income, which puts food on the table. Yeah. And trading is then sort of cream on the top of that.
Absolutely, because if you're going to trade and if you don't make money, you won't have groceries for your children.
Yeah.
You are just writing your own death sentence. Actually.
Yeah, no, exactly. Yeah. And unfortunately, that's, there are a lot of people that think it is as simple as that, and they actually embark on it only to find the hard way that it's really not nearly as easy as what they would like it to believe.
Yeah.
Ross, we're running out of time, so I'm going to just basically skip to the end of the discussion points that we had set out to talk about and ask you a little bit about your book, How to Make Money on the Stock Exchange. Where can listeners get a copy of it? And then also, just briefly, your business, Sure Trading. Tell us about that. How can listeners contact you if they want to?
Okay. Well, let me just give you our website address. Is www.suretrading.co.za.
Right.
Yeah. There is another website, I think it's called Sure Trading Profits or something like that, that have tried to, commandeer us and hoodwinking people. So please just get it right. Suretrading.co.za.
Right. Okay.
My book, How to Make Money on the Stock Exchange, you can get it via Take a Lot. You can get it at any of the bookshops. And so I would say, in that book, first of all, I try to make it actionable. In other words, there are things there that you can actually apply. In fact, I got an email just yesterday from a person who said, I've been trying this for a long time, and it's only when I read your book and that I realized where I was doing things wrong, and that was great. Yeah. And so what I did was I explained the basics in that book, how do CFDs work and how you short the market and, what actually happens, and some strategies. So it's a very actionable book, and I've done the same with the second book as well, which is coming out in February next year.
Right. So February 2023 is the next book. Has it got a name yet?
It's called The Beginner's Guide to the Stock Exchange.
Okay. All right. Super.
And it contains some strategies.
Okay. Brilliant.
So, you can get them there. At as I said, online, as well as at exclusive books and most bookshops.
Most good bookshops. Yeah. Okay, super. Well, it might be worthwhile getting you back on the podcast to talk about that book in the new year once it's out there and on the shelves and available.
I will happily do that. Thank you, Garth.
Yeah.
And then just very briefly before we end, then what do we do at Sure Trading? We offer a monthly subscription program, and let me just very briefly tell you what it entails. You get access to the members portal of our website, which contains all of our training material. Okay. So we have a beginner's training course. We've got training on the fractal strategy. We've got training on the momentum strategy and all of the different strategies. So that's the first thing. The second thing is that you have access to all of our 4 trading meetings per week. Monday evening, these are all in Zoom meetings.
Right.
Monday evening, 6 o'clock till 7 o'clock. It's a beginner's training session.
Right.
And then from 7 o'clock till 8 o'clock the same evening, our more experienced traders come and share ideas and strategies with each other. We sometimes do get guest speakers, but it's mostly just our clients.
Okay.
And then Tuesday morning, we have at 8:45 to 10 o'clock, we have a live trading session where I trade the opening of the European Union markets and the local markets.
Okay.
More or less at the same time. We've got 5-minute strategies around that, which I trade live in front of my clients. And then also on Wednesday afternoon, between 4 and 5 at the moment, or between 3 and 4, depending on whether it's daylight saving or not, which coincides with the opening of the US markets. So we have strategies around trading the indices. So that's 4 hours of meeting every week. But, sometimes people are working or they've got families in the evening. We record all of our sessions, so they have access to the recordings of those meetings. Then we've also got a Telegram chat group where our traders are chatting to each other at any time, sharing ideas. And this is also where I alert. It's basically our main form of communication, where I alert my clients to our the end of day equity CFDs and so on. And
Right.
other clients say, this is what I'm doing, and so on and so forth. So that's really a good thing to have, the Telegram chat group.
Yeah. Okay.
And on this chat group, I send that money management spreadsheet to them. Now, what I've done is I've actively, set out every single trade that I've alerted my clients to. And I kept record from March last year to March this year. We were up 135% if you had actually traded all the trades. Now, I'm just saying, don't necessarily trade. You might choose just the one that's not doing well, and so on.
Yeah, we know how it is.
And from March 2022 right up to now, we are 72% up.
Fantastic.
So we're doing pretty well with that.
Good. Fantastic.
That's what we offer for our subscription service. And then we also have a full mentorship package where there's a once-off cost, basically, and our clients in that have access to all that I've just explained to you.
Right.
Plus, there's an unlimited number of sessions with me privately, personally.
Okay.
With that person.
Yeah. Okay. Excellent. Super. So for more info, they can go to suretrading.co.za. All right. Absolutely. Magic. Ross, it's been an absolute pleasure speaking to you. Thank you very much for your time. It's, as I said, this is the last interview of season 5 of Talking with Traders, and it's been good. I've really enjoyed this. It's a good way to go out into the end of this year.
Thank you. Yes, I've really enjoyed it as well, Garth. Thank you so much for inviting me, and hopefully your guys will feel that they've gained something from it.
I'm sure they will. Thanks very much, Ross.
All right. All the best to you.
And you. Bye-bye. Bye.
You're listening to Talking with Traders, a podcast series brought to you by IG, a world-leading online trading and investment provider. If you haven't checked out the IG online trading platform, please do so and visit IG.com. Also, make sure you subscribe to the podcast series on your favorite podcast app or website by clicking on the subscribe button, and you'll be notified weekly as we release new episodes.
Thanks for joining us for today's episode of Talking with Traders, brought to you by IG, a world-leading CFD provider. We really are privileged to have such a leader in the field of online trading involved in this series. Please follow us on Facebook and engage with us there. And a reminder to make sure you subscribe to this series by clicking on the subscribe button on your favorite podcast app. If you've enjoyed this podcast, we'd also appreciate if you'd leave a review on the app too. Till next time.